Welcome everyone to Vested Interest. It's Shane back again. First stock pick of the day series here. 2023. It is January 3rd. We are right back at it. Today we are going to take a look at Enbridge. It's out of the energy sector. This is actually a Canadian company, but don't let that deter you. It is a high yielder, even though you will have to pay some taxes to the Canadian government. So I am not an accountant. I'm definitely not your accountant. Excuse me. Any tax advice you need to take up with your accountant or whoever does your taxes on this. Just full disclosure, I am long Enbridge. I have a little over 100 shares in this company. It is one I like for the dividend yield, as well as I don't think energy is going anywhere, but we will get more into that. Let's jump right into the video. Again, going to take a look at Enbridge for January 3rd's stock pick of the day. So about us, our name spells out our mission, a bridge to a cleaner energy future. That bridge safely connects millions of people around the world to the energy they rely on every day, fueling quality of life throughout our history, and especially today, we are looking beyond the horizon to invest in and build modern infrastructure, resilient communities, and reliable energy. We operate across North America and beyond, powering industry, empowering society, and safely delivering reliable, affordable sources of energy through our four core businesses: liquids pipelines, natural gas pipelines, gas utilities and storage, and renewable energy. So it's oil, it's natural gas, and renewable energy. I pulled up these off their webpage. If you want to know more about them, go ahead and check them out, www.enbridge.com. Excuse me. This is basically their pipeline across America as well as into Canada. A lot of their footprint is in America. So these are their pipelines here that you'll see. That's the top photo here. What the other one that I pulled up here, what you're seeing down below, these are actually some of the projects they currently have going. It's a lot of renewable energy projects, though they are doing some expansions of their pipelines as well. So the green little three blades there, that's their wind, right? And the little, looks like a little green sun, that's their solar. And what I found interesting, which I didn't know, I knew they had a presence in the United States and Canada, so North America, but they actually have several wind farms here. It looks like they are doing in France, not only on land, but out on the coast. Actually, I live on Lake St. Clair here, and if I look out towards Canada, I live in Michigan, so if I look out towards Canada on a clear day, I can actually see windmills out on the lake here, right? It'd be right in here on Lake St. Clair. I can see Enbridge windmills, and I know they're Enbridge windmills because there's a big deal about the pipeline here earlier in the year that was in the news. So I read up on it and realized, hey, these are their windmills as well. So it is a company I'm familiar with because where I live, Michigan, obviously they've been in the news recently because their pipelines, some of them run under the Great Lakes, and they want to pull them out, abandon those lines, and do something different. But I think they kind of the United States, whatever agreements we have, we kind of lost that deal, or at least for now. But anyways, not just in oil and gas, they obviously have an eye for the future in renewables, in wind and solar as well. You can pause this here and read the rest of this if you want. Take a look at these maps, or like I said, check them out, www.enbridge.com. They are out of the energy sector. And now over to the reason we are taking a look at them. Today, there was a lot of green in my portfolio. I don't know about yours, but definitely a lot of green in mine. But this was one of the companies that was down slightly, not a ton, but it was down 0.18%. Closed the day January 3rd at $39.03. We are talking about Enbridge Inc, ticker ENB, out of the energy sector. 52-week range as low as $35.02, as high as $47.67. Definitely closer to that 52-week low, though they may drop further back down, right? If they're dropping now, it looks like they're dropping a little more in the after hours. That's what this is. So after 4 o'clock is after hours, down a little bit more. So 0.18 during regular trading, another 0.18 during after hours. Pretty coincidental, I think, to be down the same. But so watch them if they get closer to that 52-week low. Obviously, I love to look at companies when they're at, nearing, or have set new 52-week lows. The average volume is 3.8. Today's volume 2.8. So it looks like a lot of selling, a lot of volatility today. You can clearly see that volatility throughout the day. A market cap of 79.029 billion, a beta of 0.92. So they are just a little bit less volatile than the overall market. For beta, a 1 is the market volatility. Anything less than 1 is less volatile. Anything over 1 is more volatile. PE ratio is a little high in my opinion. I like anything under really 18, but 19.61 is not terrible. Some companies you're just going to have to pay a little above what you think they're worth to get into them, and this one being a high yielder, 6.68%. A lot of people are shifting to high yield right now to combat inflation. Earnings per share is $1.99. Next earning date is February 9th to February 13th. Forward dividend is $2.61 paid out on the year. That's per share. So divide by 4. They are a quarterly payer. We'll see that here in a minute. And like I said, very nice dividend yield at 6.68, though there are some tax implications with this one because it is a Canadian company. Ex-dividend date, next one is coming up on February 14th. You need to buy them the day before, so at least February 13th or before to be able to get the next dividend payout. And the 1-year target, at least according to Yahoo Finance, where I pulled this information, just one source that I like to go to for information. I always recommend more than one, so we'll see another one here in a minute, but this is one that I like. You can go anywhere you want, Seeking Alpha, Motley Fool. There's all kinds of sites out there to get information. Just make sure you're going to at least more than one. At least 2, 3, 4, preferably. The more the better to make sure you're getting accurate information. And again, according to Yahoo Finance, they have a 1-year target estimate for $44.15 for the stock price. Now we will jump over to another site I like, stockanalysis.com. Again, you don't have to use any of these sites. I am not affiliated. I don't get anything if you go there and check them out. Just the 2 that I like. They present the information pretty nicely. I like this particular forecast analyzer here, and 26 stock analysts that stockanalysis.com has had to take a look at this. They call it a consensus buy, though it is close to a hold here. That's what this would be. This would be a sell. This would be a strong sell. This would be a strong buy. But consensus of the 26 stock price or stock analysts that have taken a look at this, they call it a buy. They do have a low estimate of $38.61, so that would be a 1.11% decline from where it currently sits. So possibly more to drop there. I don't mind it in the $38 range. My average estimate of $43.82, that would be a 12.23% increase in stock price. And if it happened to hit their high over the next year, that would be $50.17 and a 28.49% increase in the stock price from where it currently sits. All the while, you'd be collecting that, nearly 7%, if you bought them now, nearly 7% dividend yield. Next up, we will look at my position real quick. I do have 115.692 shares of Enbridge Inc. My cost basis is actually $39.19, so it is slightly below that at $39.02, at least whenever I took this snippet. So I look for anything below my cost basis before I'm even interested in adding to a position I already hold. So this one does fit that criteria, even though I will be looking for this to pull back a little bit. I like it in the 38 or below range, just so I can significantly decrease this cost basis if I add to it. Really, it's pretty close to a hold for me, just because it's close enough to mine. It really wouldn't lower my cost basis a whole lot. Right, I'm down 0.35%, $19.54 in losses if I was to sell the position today. Obviously, I'm not looking to sell this position. I have $4,533.84 into it. It's currently worth $4,514.30. So again, not looking to sell, just looking to collect those dividends, but it is slightly below my cost basis. Now here is something to be concerned and keep an eye out. I like payout ratios 75% or lower. Now, this particular company does do a lot of reinvesting, right? You saw all those across the United States and over in France projects that they're doing. Well, those take capital. So a lot of times what they'll do is they'll issue more shares and they'll use those funds to start these other projects, or they'll buy out companies that are doing these projects and add to their portfolio. So this is one to watch. I am a little concerned with it being this elevated, 130% payout ratio. It means that they're going to pay out their dividends out of something other than free cash flow, whether that's issuing more shares, whether that's a loan they take out, however they're going to do it. They are above their free cash flow right now. So something to watch. It may be because they've dropped a significant amount on some of the projects that they're building out. So this is one, I see this from time to time. They do go above their payout ratio, or what I consider a comfortable payout ratio. So I'm not as concerned with this. Now, if we're sitting here 2 or 3 quarters from now and that's the same thing, then I would start to be concerned. They do have a dividend growth of 2.99%, not the fastest grower, but with a lot of times with these higher dividend yields, you're not going to get a lot of growth out of them, but some growth there. And then they have a, like we looked at before, dividend 86 cents per share, and that's Canadian. That's why you see the CAD. And their last payout date was December 1st. Again, we saw their next one is going to be February for the ex-dividend date. So I'll probably pay out in either February or March. So that is my position in Enbridge, 115.692 shares. I am looking for it to drop a little bit more before I add to it. But a high yielder, if you're looking for a high yielding play in the energy sector, it is one in my portfolio. Not that you have to buy something because it's in my portfolio. Again, never a recommendation to buy, hold, or sell. Just showing you what I'm doing in my portfolio and where I potentially see some value in the market. I think Enbridge is starting to provide that. Though there are other options out there as well. If you want something high yielding, right? EPD is another one that's in my portfolio that I like. It's a little higher yielding, and it's a United States company. So if you want to keep your taxes stateside, so to speak, maybe that's an alternative to look at. But just a suggestion. Enbridge Inc. Let me know what you think. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. It doesn't cost you a thing, and it really does help me out. So go ahead and hit that subscribe button down below and hit that notification bell so you're notified whenever I put out any new content. Don't miss any videos. I do these stock pick of the day videos Monday through Thursday as long as the market is open, as well as a portfolio update on Sundays. That's every week. You'll see that portfolio update, what I'm buying, what I'm selling, if any dividends were paid out in the portfolio. You'll see that all. It's out in the open. I don't have any paid sites or paid Patreon or anything like that for you to go to. You just tune in on Sundays and see those videos and see what I'm doing in my portfolio. So if you're interested in that, go ahead and hit that subscribe button and join me on this journey to financial freedom. And drop me a comment down below. What do you think about Enbridge? Do you have a stock similar to it in your portfolio that you like better? Love to hear your responses, read your responses. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and drop it all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and as well as criteria, or seek the advice counsel of a certified financial advisor.